Hello and welcome to The Chart Show. I'm Victoria Scholar, and this week's three charts are BP, JD Wetherspoon and Flutter. Shares in BP rallied on Tuesday after it reported underlying replacement cost profit in the first quarter of $6.2 billion. That's ahead of forecasts for $4.5 billion and the highest level in over 10 years. It also boosted its share buyback program to $2.5 billion thanks to its surplus cash flow, which has now reached $4 billion. However, it faced a $24 billion charge from exiting operations in Russia, including the abandonment of its near 20% stake in Rosneft. Oil majors like BP have been among the key beneficiaries of the sharp rally in crude prices during the quarter, laid bare by its sky-high profits and surplus cash flow during the quarter, which allowed it to return cash to shareholders via its accelerated share buyback scheme. Investors are still weighing up the strength of its bottom line against the cost of exiting Russia, which accounted for 3% of its cash flow last year, and that led to hefty write-downs in Tuesday's report. There's also been renewed calls for a windfall tax on the energy giants like BP, following its eye-watering profit figure, which sits rather uncomfortably as the country faces a cost of living crisis. Let's take a look now at the chart of BP, because since the lows in October of 2021, we can see shares in BP have been staging gains, trading in an ascending trend line with higher highs and higher lows. Although the share price peaked in February, we can see that the stock isn't too far off the highs, with the potential to retest those highs if positive price action continues. 400 appears to be the key level to watch. It was where the stock gapped sharply lower during the COVID-driven sell-off that took place in the first quarter of 2020. And if the stock can remain above this resistance turned support, that could pave the way for an extension of the recent uptrend and a breach of the recent high around 418, the next resistance level to watch. JD Wetherspoon is expecting profits to break even in the current financial year, with a slow improvement in sales in the absence of further restrictions. For the 13 weeks to the 24th of April, the pub chain said like-for-like sales fell by 4% compared to the same period in 2019. Wetherspoons has been struggling to restore sales back to their pre-pandemic levels, with weaker demand making profitability a major challenge as the pub group targets the feeble aim of breaking even by the end of the year. Although Chairman Tim Martin is relieved that COVID restrictions are finally over, with the cost of living crisis, household budgets are tight, leaving many individuals and families with little left over to splurge on treats like going to the pub. And on top of that, Wetherspoons is dealing with problems of its own, with input cost pressures from rising food, drink and energy prices, as well as a recent VAT increase on food and non-alcoholic drinks. Taking a look at the chart now, we can see that reflecting these pressures, shares are down by over 45% over the last 12 months, with the stock close to testing support at the March 2020 lows. We can see there was an extremely sharp sell-off in 2020, with the stocks in the hospitality sector brutally hit. But off the lows, shares managed to retrace more than 75% of those losses before starting to roll over into the second quarter of the year. Since the peak, the stock, you can see, has been trading in a descending trend line with lower lows and lower highs, with Wetherspoons breaking back below the 23.6% Fibonacci retracement level, pushing below 800, with 700 as the next psychological round number support level to watch. A break below that level could potentially pave the way for further declines. Flutter delivered 6% revenue growth in the first quarter, driven by a 15% increase in average monthly players and a 45% increase in sales in the United States, sending shares to the top of the FTSE 100 on Wednesday morning. However, outside the US, group revenue declined by 3% on the back of safer gambling and regulatory headwinds. This is a company that's fared extremely well during the pandemic as a stay-at-home stock, with millions of people glued to their laptops at home. However, since the global economy has reopened, the post-COVID environment has proven to be a lot more challenging, with stocks under pressure since March of 2021, including Flutter. Nonetheless, its US market is successfully navigating these challenges, with strong revenue growth stateside driving its share price sharply higher on Wednesday, bucking the recent downtrend. Beyond the US borders, though, macro uncertainties, the cost of living crisis, and the post-pandemic lull in demand remain key challenges for the business, which is why the stock is down by more than 25% this year. Let's check in on the chart now of Flutter, because after enjoying an initial uptrend with higher highs and higher lows, the stock peaked in the first quarter of 2021 and has since been struggling to uphold that positivity. In fact, we can see a significant downward trend line that's emerged since the fourth quarter of last year, with lower lows and lower highs. Wednesday's bounce comes as a welcomed surprise for investors, with the potential for it to mark the start of a more positive trajectory for the stock.